Yes,
and
that's good. So just, I'll briefly introduce myself, and then I'll introduce the panelists here, and we'll dive into the session. I co-run Jefferies investment banking coverage of the commercial aviation and private aviation space. Over the past 4 years, we've been very involved in the space on both the operator side, the services side, and helping many of our clients raise both debt and equity in what is a evolving sector, one that's, I think, going through more change in the past 4 or 5 years than we've seen in the past 20 years. To my right is David Gilmour from BP Ventures. To his right is Dean, I forgot your last name. Donovan, with Columbia Equity Partners, and to his right is Shawn Vick with AE Industrial. What I'd like to do is just turn it over to each of you, tell a little bit about your background and some of the investments that you've made in the space, and we'll dive into some of the topics that we have up on the board.
Okay, thank you very much. Can you hear me? I'll try the other candy floss. That one seems to work. Okay, my name's David Gilmour. I'm the head of BP Ventures, so I'm the venture capital arm of BP, and BP Ventures invests across the whole of the industries BP works across. So aviation is one part of what we do. Just in terms of background, I was the CEO of Air BP, so some of you may have heard of Air BP, jet fuel supplier across the industry. So jet fuel across all the major segments, commercial, military, as well as general and business aviation, and we are actually operating over 700 airports across the world. So I've had over the last 7 or 8 years a fair exposure to the aviation industry, so it's an industry which I have a real passion for and love for. So it's great that as in my new role as head of the venturing arm, I'm able to actually invest in technology disruption within the aviation industry. So there's 2 investments I'd just like to share with you. The first one, which we did from Air BP, was around Rocket Route. It was a mobile flight planning company. And we did that to actually help Air BP start to differentiate itself, particularly as it started to look to enter new markets where, as you know, jet fuel is pretty much a commodity. Although our service is differentiated, we want to add to that. So we started to do some venturing into new technologies, those technologies which are disruptive. They're able to be game-changing in the way that our customers are going to do their business. We followed that through with a further investment in a company called Vick, a digital kind of broker, but actually what we particularly admired about the company was the brand, their ability to bring tech into changing the way that the industry works, and for us to find a way of really understanding how this disruption in the market, which we've heard from JetSmarter, how that is going to change the shape of the aviation business. And for us in Air BP, we're really seeking to find our role in aiding that disruption and finding new sources of value for both BP and helping the industry transform to be a more efficient and effective place, and I hope grow the market for consumers.
Okay. Dean?
Terrific. Dean Donovan from Columbia Equity Partners. We're a private equity group. We invest largely in travel companies. I have an aviation background from way back. I worked in Bain's aviation practice and ran that practice for a while. We helped to start Volaris Airlines on the commercial side, which is Mexico's largest domestic carrier now. Very interesting lessons from that around stimulation that we hope to help bring to private aviation through our investment in Stellar Labs.
Thanks, Dean. Shawn Vick. Jim introduced me as AE Industrial. That might be a little confusing for some folks. You might know me as Global Jet Capital or some of my affiliations with the OEMs before that. I've been a partner with AE going back to 1999. We have a specialized aerospace private equity firm, commercial and business aviation, aerospace defense, specialty industrial, and several service businesses across those various segments. About $4 billion in deployed capital, half of which is in direct investment, controlling investment. The other portions are in co-invest, of which Global Jet Capital is an example.
Okay, thanks everyone. So, I think we have an interesting panel here in that we have sort of 2 more PE style investors who are looking for opportunities in the sector, and one sort of corporate looking for kind of strategic technologies through their venture group that they can use to that they think will disrupt the business as it relates to their company. I wanted to throw out sort of 5 different changes which we see taking place in this sort of private aviation sector, and maybe then pose a question to each of you in terms of how either of those affected your decision to make the investments that you have. One that we see is changing consumer preferences. Less customers want to own their own aircraft and more want to be part of a sort of closed fleet or some other type of charter product, and whether it be a shared or a whole charter. Another change that we see are newer aircraft models. We see new aircraft models being used in this space where they haven't been in the past, whether that's Wheels Up introducing the King Air 350, whether we saw Surf Air introducing the Pilatus, sort of other more flight-specific and flight economic type aircraft. We also see technology disrupting, whether that's B2B type technology, if I want to talk a little bit about Stellar, or whether that's B2C type technology that JetSmarter is using through its app to attract customers. We've seen digital marketplaces adapt in terms of Victor, what they're doing in terms of bringing a sort of more analog business such as charter onto the web and digitally. And then lastly, the sharing economy, strategies like JetSmarter, where they're trying to build utilization on the aircraft and increase load factor, all towards making these aircraft more profitable, which sort of fits with the first trend we see as aircraft sort of move from individual ownership into sort of corporate or businesses, fleet operators. Those aircraft need to sort of earn a living, if you will, and be profitable. So with those 5 changes we see in the sector, do you want to talk about how either of those sort of drove your investment?
Yes, I mean, I mentioned the 2. So if one thinks about BP's strategy, BP announced its strategy last year, and what it recognizes is 2 big challenges which face the world. The first one is for BP, it needs to provide energy for a growing world. In other words, the core business of BP, which is to sail and market and develop oil and gas business, is absolutely critical to actually ensure economic growth around the world. But the second challenge, and the one that relates to our venturing strategies mainly, is around the energy transition, where we see a big move to renewables, to gas, to electrification of mobility. So in that, we see a number of distinct areas which we need to understand, to deeply understand the energy transition which the world is going to go through. One of those is a move to low carbon. So that gets into sort of investment in biojet, which Air BP's done through an investment in another business called Fulcrum, which takes waste to biojet. The second area is the whole area of mobility, and we see in mobility a number of different trends. One, clearly the move to electrification and batteries. Some of that's happening in aviation, but we haven't yet made an investment in that area. The second area is going to be things like ride sharing, and certainly I would see our investment in Victor to be part of that understanding of how ride sharing, or indeed sharing of vessels or vehicles or cars, and how that's going to disrupt the markets we're in. And the last one is autonomy, so therefore the whole area of connected car and the way digital technologies are playing through. So if you take those trends together and think, what did we do with Victor? We found a company which was very interested in actually enabling us to create a proposition to consumers around low carbon through the work of Target Neutral, which actually is part of our sustainability agenda. It's actively involved in improving the efficiency of the industry through a kind of ride-sharing approach, and it's disruptive. It's actually a new technology, and so therefore that drove us to think through how can we understand how an investment in this company and the way the company evolves and the way it disrupts the industry is actually going to help us understand broader about the way BP needs to actually move within this mobility area. So that drove our investment in Victor.
Okay. And in terms of partnerships with these investments, were there certain partnerships on the fuel side that were also set up?
Well, what we know is we can't actually mandate any operator to be using Air BP. We need to create a proposition which is price competitive, it deals with service, and the issue around target neutral is to say we want to offer to the consumers the choice to actually offset the carbon emissions for their flight. We need the operators to support that, and that's part of our proposition to say to operators, engage and partner with Air BP, because we can actually make a clear proposition to a growing customer base around the impact of their activity on the carbon footprint of of the globe.
Okay. Shawn, question for you. In terms of your investment in Global Jet Capital, it seems to be following a trend that we've seen play out over the last 20 years in commercial aviation. Now you have approximately 50% of the commercial aircraft fleet is owned by aircraft lessors. Airlines own fewer of the aircraft today than they ever have. It seems that you're now investing in that same type of business in the aircraft, in the general aviation space in terms of leasing. With the trend of sort of aircraft ownership falling and more fleet operators owning aircraft and therefore needing financing and or lease financing, you want to talk a little bit about your sort of thesis behind Global Jet?
Sure, and I think I would start with, remember when you look at, 10-year-old aircraft and newer together with new aircraft deliveries, on an annual basis, there's still, 2,500 transactions annually and growing right now in this economy. So as we have the current, group of developed economies all in ascension for the first time since 07, 08, 09, there's a great deal of opportunity still with, corporate obligors and high net worth obligors. So while we do have conversations in our space with folks who want to operate, multiple aircraft in a shared program or as a charter management business, our business model doesn't necessarily lend itself to that today. It could. We could modify, we could invest in that space. But, we very much look directly through to the credits, and we require either a corporate or a personal guarantee. And with that many transactions annually, there's still some, $16, $18 billion of value out there in transactions. And, for instance, since we opened the door about really in earnest 24 months ago, the business has done about $1 billion in new volume. So we're on a excellent growth trajectory, wrapped up in excess of $500 million last year. So right now, there's ample opportunity still with the individual owner-operator, but we're paying attention to the trend that you're talking about. There's no question that the shared economy is here and is here to stay. People follow their economic interests, and they want an experience. If you look at the average age of Fortune 100 company CEOs and high net worth people, owning the asset is no longer equated to status. It just isn't. Those days are slowly passing. What is emerging, though, is people are coming into those types of businesses, and when they decide that they actually need that asset dedicated to them, then they will find a mechanism to have that aircraft available to them and only themselves. So right now, there's plenty of market opportunity in our, what I'll call, traditional space. The other thing that we look at occasionally is, a manufacturer's skyline. That's very much the model you've talked about, where the leasing companies effectively, bought up that capacity. We don't think that that's necessarily a space for us to invest in today. And candidly, the manufacturers, and I've got a little bit of experience in that space, it may not necessarily be helpful for them either. So we're being very thoughtful about that.
Okay. Thank you. Have you seen any changes in the either the tax laws in the U.S. or some of the new accounting changes that will be made to leasing in the future? Will that affect companies' desire to lease aircraft versus own aircraft?
Well, I mean, early days. I think there's lots and lots of opinions. Our own analysis shows that it's almost balancing out. On one hand, 100% depreciation on a pre-owned aircraft could make an argument for cash purchase and not a financing. Like-kind exchange, however, has been eliminated. And at the end of the day, and let's just focus on the operating lease for a moment, the real value proposition is this. Whether you're a high net worth individual or whether you're a corporate buyer, they tend to only do this once every 5 to 7 to 8 years. That's a lot of risk in that one asset and what's proven to be a depreciating asset. Those days are here to stay. So really the value proposition in the operating lease environment is one around, do you want to take the residual value risk on that asset? If you do, that's fine. We can blend that residual value risk across a portfolio that has 300 airplanes in it. So, that's our business. That's the value that we can provide. And it's really a question for them on balance. Do they want tax advantage, or do they want risk reduction?
Okay. Dean, in terms of Columbia's investment in Stellar, there's obviously a lot of different technology platforms out there, ones that are focused on ride sharing, ones that are focused on sort of online brokerage, and many others. Do you want to talk a little bit about sort of what you saw in that technology that you thought could be most disruptive?
Sure. So the interesting thing about Stellar is it's sort of a concept that's associated. Technology has been successful in other industries, as you alluded to, with an industry that I think is relatively technologically backwards compared to, say, something like retail or where taxis have gone in the last 5 years. And so the question we had to ask ourselves before we invested in Stellar is, why has it taken so long? And why hasn't this been done some time ago? If you can get something done in the taxi industry, I think you can get something done in almost any industry. So the thing that was interesting to us about Stellar was the relationship with Rockwell Collins, where to really create a proposition that both improves transparency, improves customer experience in the booking process and beyond, and actually reduces cost, you need to connect the back end to the front end. And the industry is extraordinarily interdependent. There's literally thousands of operators in the United States, and they're all doing business with each other. And so what you need is a platform and a concept where you can facilitate that business-to-business transaction flow. And to do that, you need to be able to automate the legalities. You need to be able to create transparency when you want it, and you need to be able to turn the transparency off when you don't. And Stellar had that combination of issues. The other sort of underlying premise is more of a market premise, which is if you look at the relative cost of private aviation versus, say, driving a car or commercial, you're talking about something that on a per seat cost, and for those of you who were here for Jet Smarter a few minutes ago, you really saw that concept play out. It's extraordinarily high. And what we know from IATA studies and commercial aviation is that when you take that cost down a little bit, you create entirely new markets. So we did that in Mexico with Volaris, where we completely blew up the bus market because we were simply offering a proposition where when we took the cost down by 30 or 40%, we didn't change the existing market. Those customers were still there. It was still a profitable market. It was an exciting market. But if you can help open up a new market by making things more efficient and offering a different value proposition, you can attract an entirely new kind of customer to your industry, and that becomes a growth proposition and something that facilitates change. And so that's really what we're looking to help the industry do in Stellar. And I think Per said this very well at a panel earlier today, which is the point here is it's not a zero-sum game. The technological vendors can help the operators and the owners of aircraft utilize those assets in a way that's more efficient and that gives them a better experience, and everybody wins.
Okay. I think one of the other questions which we have on the listed on the panel here is asset light versus ownership. There are a number of new business models, including Stellar, including JetSmart, others where they're not making commitments to actually buying the aircraft. They're either investing in technology or sharing or charter or so forth. But you've seen other business models, Wheels Up, Vista, others that are building sort of large fleets, taking on the need to raise capital and hence hire banks, which we like, or the ability to kind of go asset light and use technology to be disruptive. Either you want to talk about why you made a decision either to go into a sort of an asset heavy or investment in the aircraft versus investment in technology?
That's a question to me.
Or to either one.
So I think it's horses for courses. I think with Stellar, there's a clear proposition there where you're facilitating other players in the industry. I think people love to talk about aircraft as being asset heavy and software as being asset light. Actually, developing software is pretty expensive, as I think everyone up here knows. And the principles are the same, which is to develop a software platform, you want to put a lot of people on that platform so that all the people that are enjoying the benefits of that platform have a much lower cost. Same thing with JetSmarter's proposition or perhaps Victor's proposition in booking charter. And so in our case, I think there's great asset-heavy plays. I think there's great asset-light plays. It really just depends on the creativity of the business plan. We went asset-heavy when we did Volaris. In Stellar's case, we're going asset-light.
Shawn, do you want to talk a little bit about Global Jet's capital decision to invest in aircraft?
Yeah, I
and the
mean,
platform?
and candidly, I've got to put my AE hat on really to answer that question. So we came at it in a slightly different way. Actually, Air Inc., which is a global provider of integrated, flight operations services, was a co-invest for AE and for the Carlyle Group. When we transacted that business to Rockwell Collins, okay, we recognized the inherent value in that business and that platform, but it required a significant amount of investment, in an operating platform to bring it into the digital age. So what interested us when we got introduced to Stellar was really the relationship that they were developing in a strategic manner with Rockwell Collins. That's really what got the second and third look. To your point, and you put your finger on it pretty eloquently, we're asset heavy in Global Jet Capital, right? We're investing in the metal. But part of being thoughtful is this is a leading technology, and to the extent that the trends are going to change dramatically towards asset light, having access to that information, watching the development and the type of usage of the assets that are out there, where that trend is going, is also important to us. So that's the thesis for our investment in it.
And I mean, Global Jet owns the assets, but they also have a sort of full-fledged marketing team. So you have the platform that can remarket and sort of have the relationships with customers and be able to sort of redeploy those aircraft.
Yeah, we look at every asset well in advance of the termination date to determine if it's something that we can retain and release. That typically tends to be a function of the aircraft's age. If we do want to retain it, we'll make investment and we'll turn it around and put it back in the marketplace on another lease. If not, then we work with all of the high-quality, reputable brokerage firms that are represented in this room and in this process to dispose of the assets that are coming off lease that we're not going to invest in.
What about cycles? With the Dow at 26,000, one would say we're beginning to get to a lofty point in the market. But on the aircraft value cycle, we see sort of values, at least for some certain large cabin aircraft, beginning to depreciate quicker than we might have otherwise assumed over the years. The technology cycle in this industry, you could argue, is just really beginning. We're at the very early point of that cycle. But then the general aviation cycle itself, I mean, in the U.S., over the past couple of years, we've seen continued more flights, more general aviation flights, than ever before, certainly in the past 5 or 6 years. How do you think the cycle aspect applied to your investments?
Yeah. Okay, so a consideration, I think, is just despite the scaling factors required to actually make a technology-based business work, the entry barriers now for tech and the disruptive elements of it are low. So there's a lot of software engineers around, although they may be increasingly hard to get as the industry grows. But the entry barriers are low. So therefore, I think, in terms of investing in digital as opposed to, let's say, metal, that starts becoming quite attractive if you can develop disruption. I think I spoke about BP's strategy. The time's right for BP with the energy transition and the pressure on carbon dioxide and Paris to start dealing with the energy transition, and therefore actively investing in these different mobility models. That gave the right timing for us to do that. And I think you raised it, which is that this business aviation market appears to be sustainable, it appears to be growth, and a lot of these disruptive factors look to be able to increase the market. Therefore, in terms of a forward investment into a growing market, with a reasonably stable margin structure, it seems like the right thing to be doing. So I think when you take those combinations together, attractive industry, low cost of entry, certainly for digital, and actually, and BP ready to invest its capital dollars in this market, the time was right over the last few years for us to make that investment.
In terms of a sort of a global investment, each of you are invested in platforms which arguably are global in nature, and more, I think more of the businesses that are starting, more of the capital that's coming into this industry is looking for sort of treating it as a global industry rather than sort of just a North American, European, or Asian. Do you want to talk a little bit about how you see sort of the global nature of your business, Shawn?
Well, airplanes can go anywhere, right, by their very nature and design. And as economies grow and wealth is created either, through strong, corporate balance sheet and P&Ls, or whether that's to a high net worth individual whom, quite frankly, virtually every single high net worth individual is really tied to a business, that they control or they own. So, we recognize that there's tremendous opportunity in Asia. We've heard a lot of support for that in this conversation. If you remember, 48 months ago, that the feeling was that China would begin to slow down, that the take rate of airplanes and the activity as a result of some of the regime policies was going to really dampen it. I think that was more discussion than actuality. You see Europe coming back, and obviously we can see the U.S. That's been on a modest to strong growth rate. I think what surprises me more than anything is this world that we all live in today has somehow learned to take body blow after body blow after body blow. After the tragedies of 9/11, and if you look at the disruption and the dislocation around the world and the geopolitical issues, it's just amazing that we've got all these economies in ascension. And so I don't know that that's the new norm, but it's been the norm for the last 6 or 7 years. So there's opportunity, and you have to be thoughtful. You have to be exceptionally diligent in your due diligence, especially when you're underwriting, credits for 40, 50, 60, $70 million airplanes. But it's certainly a global business, and it's not going the other way. It's just going to become more and more an interconnected, global, world.
I'd agree with that. I think that people do get caught up in terms of investing in business cycles, and it's understandable because there are businesses that are highly cyclical. One of the things about being a private equity investor as opposed to in public equities is you get to choose when you exit. And so you're much better off investing in a fundamental thesis around transformation than you are in trying to time the cycle. And so, I think this industry has a lot of characteristics that would suggest that there's tremendous value to be unlocked. You've got low aircraft utilization, both in terms of number of hours flown, but also in terms of seat utilization, right? You've got relative lack of transparency in terms of the way that customers are experiencing pricing and booking. And then there's a whole customer experience element that I think the industry is very good at. If you put that together with changes in technology that are coming through in the next few years, I think you've alluded to, I think you have an opportunity for an industry that could grow, very, very substantially in the future. And that's the kind of investment thesis I like, right? Where you're betting on the fundamentals, and whether the economy goes up or down, those fundamentals are still going to be moving right through that trend line.
I would agree with that, because the thought that timing the cycle is a useful methodology is usually a path to ruin.
I'd just like to add a little bit, which is on the venture side, generally our investments are, somewhere around about 10 years. So we're in here for the long haul. So that takes us at least through probably a cycle. And the other bit about growth, I think I'd just like to think, certainly for the booking experience, we've got consumers who are paying, up to $10,000, $15,000 on the internet for a booking. One thing goes to China, and just think about the ubiquity of WeChat now. So you think about the Chinese market, which has got huge wealth and actually is an emerging market. A digital play is going to be very, very attractive, I think, for that market where everything is done through an app. And I think actually I can only see that the growth of these sorts of business models is going to accelerate as the Chinese start using business aviation and private aircraft more and more.
Maybe one last question, then we'll turn it over to the audience for any questions. Do you want to talk about each, how you sort of approach your investment in terms of whether you wanted control investment or whether you're comfortable being a minority shareholder, and then how you sort of view your partnership with management in making that investment?
Go ahead.
So we're not concerned with control per se. I think in any private equity deal, your fund is going to have certain parameters, investment parameters that you need to hit. Investors have certain time frames, so you need certain protections for what you're doing, and you certainly need protections if things go poorly. So I'm not saying that there would be no control, but in terms of share owner control, et cetera, that's not a prerequisite for us. I think what's really important is your relationship with the management. We have a terrific relationship with Paul and Dave. I think they've done a great job. And working with the management and productively trying to help them is really what it's all about, because at the end of the day, you're a team trying to create something that's of value to everyone. And if you don't take that spirit, you're not really going to get anywhere.
So from my perspective, we do two things. We don't invest for purely financial returns. We have a very, very deep relationship through the aviation with BP, with Victor and with Rocket Route. And it's all about how do we work in partnership to grow our mutual business in the marketplace. So it transcends purely an equity investment. I echo everything that's just been said around the relationships. We work hand in glove with all our portfolio companies, and we see them through the good times as well as the bad times. So actually, it's a shared endeavor for success.
So we do invest for a financial return in our model, so I can appreciate the difference between private equity shop such as AE versus what you're referencing with BP. It happens that most of the opportunities end up with control in the business's hands, our hands. But to the point made by the two gentlemen to my left here, every single one of those is a partnership with management. You absolutely need the fundamental expertise. In most cases, when we find opportunities, it's around an enterprise that has either been part of a very large monolithic company that's gone underinvested in. It's apart from their core focus, so there's a value opportunity there. In many cases, they tend to be sizable family-owned businesses, and they're ready to transition out of the personal ownership. So in many cases, they're looking for investment capital to grow the business. So when we approach it, we want to understand what the vision for the business is by that management team. Do they have the energy and the vision? What resources do they need? Is it affordable within the acquisition price? And then we'll package that together. And if the right answer comes out of the equation, that's a controlling interest in the business. We do co-invest, as I said, and Global Jet Capital is a good example of that.
Okay. Well, I guess at this point, we can turn it over to the audience if there are any questions. We have a question over here.
It's good to hear the Powell talking about investment, but I wouldn't like to presume that just talking about investing in what you might think is the sexy part of the business, because all this investment could be in vain if nobody can actually use the assets they're investing in. If there are no airports or FBOs to get into, then what are people going to use their planes for, all the technology? And if there are airports, but not the access or slots available, again, how are they going to use them? So my question to the panel is, how do you view investments, not in just in infrastructure and what's, as you say, what might look sexy today, but how do you invest in things that really create the value chain going forward for the consumer and industry in the long term?
Okay, maybe I start with this, which is I spoke that I was the ex-CEO of AirBP. AirBP spends huge sums of money investing in airport infrastructure. In the major airports, it's hydrants and tanks, but we make a major investment in expanding the network, which will take the smaller business aviation airplanes. So typically, we'd go in, into an airport or a new development, and we would actually own and invest in the infrastructure. So the growth of this business is core business for Air BP. It is about metal on the ground. It might not be flying metal, but it's certainly, we invest hard in actually assets on the ground to enable the growth of the industry.
Yeah, the only thing I'd say is, obviously we're not investing in airports, so we're not going to influence things in that way. But what we do is we do enable operators and other customers to use infrastructure more efficiently. And when infrastructure is constrained, that becomes absolutely critical, because if you can free up slots, if you can free up landing spots, if you can free up capacity that otherwise wouldn't be used simply because of inefficiency, that's as good as building more stuff.
Of the 7 platform companies inside the portfolio, that includes composite aerostructures manufacturing, ranging from support of Tier 1 OEM manufacturers to SpaceX. We have precision engineering in manufacturing of special alloy materials for the internal combustion section of turbine engines. We have one of the largest independent engineering firms on the planet, some 4,000 engineers that are behind the firewall with virtually all the primary engine manufacturers in terms of new program development as well as aftermarket. So to your point, you can't really just be mono-focused in one area. It's not a wise or prudent approach, but in our particular case, we're really across the industrial spectrum and have invested heavily in infrastructure previously. Most recently, Landmark Aviation was a co-invest by AE and the Carlyle Group and transacted with BBA.
Any other questions for our group?
Jim, do you want to do some of the... Can you see the Slido? Does everyone want to pick one question quickly off the Slido screen?
I need to read them.
I'm happy to. So how do we intend to lower the cost of flying to the point that it opens up new markets? So there's really a couple of things that help open up new markets. One is really quality of service. And so if it's easier to book, if it's easier to fly, if it's easier to change bookings, you will stimulate traffic. And that will open up new markets. And that's been proven through the opening up of commercial air transportation to the internet. It's been proven through Uber, where by simplifying payments for taxis, they tripled the size of the taxi market in the United States in less than 10 years. It's incredible. So completely discounting cost impact, simply smoothing the transaction process and simplifying the customer experience, improving transparency, will significantly grow the private aviation market. And Stellar's not the only one engaged in this. Victor's helping. There's others that are working on this. But that's certainly one thing in an area that we're going to be working on. The second thing that is extremely important, obviously, is cost management. And probably the biggest opportunities on the cost management side are aircraft utilization. That really has to do with the integration of revenue management and back-end network optimization. There really isn't a lot done today in terms of either of those things in this industry. I'd say it's a very early stage. And so as software platforms enable those things, operators will be able to better use their assets. Owners will be able to better get returns on their assets. And that will lower the costs of flying, which will in turn stimulate markets. So I think those are the ways that we think that we can help grow new markets, but we're part of an ecosystem, and the entire ecosystem needs to move in step. It's not just the enablers who do it.
So is fintech, financial technologies for aviation, an area that we would look at for the global jet capital business? Absolutely. We've actually begun a process around that. I say that, though, with the acknowledgement that, this is these transactions are highly bespoke, exceptionally detailed, very discreet, control of the data, control of the information. The customer's data needs to be protected at all times. A lot of that lends itself to, technological tools and resources. But there's no one product out there right now that can do all of that. Most of our technology investment right now is in the back end of the business. So we've got a lot of moving pieces with, several hundred airplanes to track, and that's where we've begun our investment in technology.
Great. And I think if we just do one final question for you, Jim. Last year, we saw a lot of cash coming into business aviation. Will we see more or less in 2018?
I think last year we saw large capital raises on both the debt and equity side from companies such as VistaJet, such as Wheels Up, Jet Smarter, Gamma Aviation, and others, and so forth. I think as those companies all intend to continue to grow their platform, the businesses all will require more capital, whether that's capital for buying aircraft, which requires both equity and debt capital, which we did not talk about on this panel, or whether it includes acquisition of more members and so forth. I think it's safe to say that you'll see more equity transactions and debt transactions this year.
Great. Thank you very much, guys. Thank you.